Yeah, guys, good morning. This is Friday morning. This is the peak of the Asian session. So I decided to review this setup, okay, on USD JPY, okay? And of course, because of this JPY, the Japanese yen currency pair, okay, this instrument will be moving rapidly during this hour. Okay, this is 157, AM, Nigerian time, GMT +1. Okay, so I decided to come and watch price action here, guys. It's very interesting. Okay, so let me just discuss this setup with you guys. Okay, all right. I did my top-down analysis. Okay, I was able to pick my zones from the daily time frame. Okay, this line you are seeing here is my daily zone. Okay, I have some other zones in between. All right, if you look at it, you'll see that there are some zones below. Okay, so apparently this zone here is the highest high of this currency, of this instrument at the time I did this top-down analysis. All right, so I was able to identify price action charts. Okay, that is candlestick charts and formations. Okay, I'm very good at that. By the way, I didn't introduce myself. My name is Trux. I'm the chief instructor of MetaZingo. TradeX is a forex trading and coaching academy. Okay, I'm the chief instructor. Okay, so guys, I did this setup because I wanted to explain a few things to my students. I said, let me just do it, and I sent it to them to get their comments. But let me just give you a total overview of what my thinking is. Okay. Now I was able to identify, two chart patterns. One, inverse head and shoulders. Okay. And look at the structure, inverse head and shoulder. Okay. This is the right shoulder. This is the left shoulder, and this is the neck. Okay. All right, so I was able to also to identify the neckline, okay? Now I saw price, okay, pierce and broke through the neckline, okay? And after that, the strategy is that you should get a retest of the next neckline, okay? And you look for a buy opportunity. Of course, you know that this chart pattern is a bullish reversal chart pattern, okay? That is one. Secondly, I saw another chart pattern again here. Okay, this is a rising wedge, okay? This is a rising wedge. Apparently, the market was coming from here, bullish, and, apparently met a supply zone. You can see how powerful these candlesticks are. Okay, so when it got here, the BS lost traction, okay? And this doji, this pin bar was formed. This is a solid hammer, that got formed here. And for me, this is a bullish, candlestick pattern because it is formed on a what? On a Fibonacci level, 23.6 Fibonacci level. Okay, guys, I forgot to also tell you that I was able to use Fibonacci to mark out levels after doing my top-down analysis. When I dropped down to 1 hour time frame, that is my entry time frame, I had to use Fibonacci to mark out the other minute levels, okay? Minute in the sense that I didn't take them from the higher time frame. I took this level, Fibonacci level, from the H1 time frame. It will filter out it will refine the top-down analysis levels, okay, or the support and the resistance levels I identified on the daily time frame. So when you drop down to the 1 hour time frame, use Fibonacci to refine, those, levels. Okay. All right. So continuing to describing this setup. Okay. Now, when I saw this pin bar, I saw that this area is a very, value area where price was being rejected. Okay. Price broke it here. Okay. And was able to push down to this level and met a support here, okay? And from this support, price went up and this pattern was formed, all right? So now, what price action is currently doing now is where I want us to focus our attention. Okay, again, I was able to mark out this wedge pattern here, okay, to also show that there's going to be an intermittent drop of price, okay, from this level, all right, out of this wedge pattern. Because if you see this wedge, this is a rising wedge. The psychology that will play out here is that price will break out of this wedge structure, okay? So I was expecting that, and indeed, you can see that 1 hour candle has closed, another candle has started forming, you know. My timer is telling me that another candle just started forming, okay? And you can see the battle going on here between the bulls and the bears, okay? There is hesitation going on here. There is indecision going on here. You can see this classical doji here that is formed. So what I'm expecting to play out from this setup is this, okay? I'm looking for a long trade opportunity from this inverse head and shoulder patterns. And I'll wait for a break and retest of the neckline, okay? Like I said before, the neckline has been broken. The retest is currently happening now. So this is the structure level where the retest will terminate, okay? At the Fibonacci 38.2, and price will push up to my first take profit target, okay? I expect my TP to be here, and there's TP1 to be here and TP2 to be at the next, you know, structure level, a structure zone, okay? So that's what I expect to play out in this setup. I have already sent out the signal for these, okay? And the signal is a buy stop, okay? So what I did here is that I set up a buy stop order, all right? Because my thinking is that if price is rejected from this Fibonacci level, that will be retested, okay? That will be tested, as it were. It will push up, okay? And if it is able to push up and break this high, then a bullish bias has been established. So that price action will pick this pending order here, and of course push me to, you know, to my target, you know, price, okay? So that, guys, that's what I did here. I made sure my risk to reward ratio is 2 to 1, okay? 2 reward and 1 risk, okay? So this is where my stop loss is, and my stop loss is $13.10, okay? While my take profit is sorry, my take profit is what? Yeah, my take profit is $26.21. Okay, 21 cents. So guys, that is all about this setup. I expect price to do its thing. Okay, the market is moving, but of course, you know, the Asian session doesn't have much liquidity. But this currency pair, being JPY pair, okay, is expected to move, you know, by this hour or by this session, all right? So that's why I've stayed awake to monitor this trade to see how it's going to play out. It's interesting. You can see what price is doing here, you know, what price is doing here, it has broken this Fibonacci level, okay, and current has tested this and tested 38.2 level and could not break it, okay? So another test of the bears is still, you know, still showing up here. So I'll just wait and see what will happen. I expect price to push up from here because the neckline has been tested, okay, has been broken and retested, okay? So when that happens, I expect price to push up to hit the entry price, okay? And then, you know, go up to the take profit price, okay? So guys, the other thing you need to do is that this is an intraday setup, okay? So you have to be in front of your computer to monitor this trade and manage it, okay? Now, once the trade is triggered, okay, you have to be there to manage your trade. You have to be there to, once trade has moved 25 pips into profit, remember to trade your stop, okay? 30 pips into profit, move your stop to break even, okay? And continuously manage the trade until you're able to completely, you know, throw out the risk element here until this trade is risk free. then you can begin to ride the trend to the upside. That's what I expect to play out in this market. Guys, as you know, nothing is 100%, in Forex. Anything could happen, all right? But the important thing is that you have to put protective stop to protect your account. It is very, very important. You have to protect your account, all right? Please observe proper risk management when trading this instrument. I expect that some profit will be made here, so I wish you guys all the best, okay? Thank you very much, and bye-bye.